What's up everybody, Yasin here. Thank you for joining my channel. In this video, we are going to talk about why these central banks have to come in and do programs like quantitative easing or QE or money printing. Why do they need to do that, and why governments have to take their help? So we are going to further dig into this, so stay tuned till the end. Let's dive in. Alright, so before we go into this, let's establish one thing. So governments, whether this is federal government or provisional government, they don't produce any wealth. They don't produce any goods and services in the economy, and they don't print money, okay? So all they do is they transfer the wealth from the wealthy individuals to the unwealthy individuals in the economy. So they basically take the wealth from the rich people, spread across the economy by spending into different social and welfare projects like schooling, like healthcare, like social housing, like childcare benefits, stuff like that. Okay, so that's where the government's role comes in. So they basically do that wealth transfer across the economy. Now, what are the revenue options for a government? Number one is taxation, right? So taxes is one of the main source of income for government to take revenue from the public and then redistribute it across the economy. Now, first of all, understand one thing: taxation is involuntary. Certain elected individuals at the parliament decide who's going to get taxed at what rate. Certain individuals which are low end of the bracket of the income, they get taxed less, versus the people who are at the higher end of the salary bracket will get taxed higher. What we have seen in the last 2 decades, the revenue collection in the form of taxation is less than what the governments are spending money into the economy. So there is a growing fiscal deficit that is continuously growing bigger and bigger, and the government needs other sources of income to finance that fiscal deficit. So fiscal deficit is the difference between what government earn versus what government spend in the economy. Okay, so the earnings are mainly in the form of taxation. Spending is what government spend across the economy. Okay, now that fiscal deficit has been consistently growing year over year, and how do these government cover that deficit is by going into the public sector and borrow money from them, right? These are wealthy individuals, private corporations, certain financial institutes. So these are the lenders who lend money to the government. Now, understand the difference between the two. Taxation is involuntary, predetermined before the end of the year, and the borrowing is voluntary. So it's not the government who will decide, it's the lender will decide how much money they're going to give it to the government and at what interest rate. Okay, but here's the thing: there is a limit to where government can borrow money from the public sector, because at the end of the day, it's free market, right? So the government will go out in the market, ask for money. If the lender feels comfortable, they will lend money to the government. If not, then they will say, sorry, I cannot lend you anymore. Okay, so that's the basic principle of the free market transaction. We are seeing that the government, especially in the Western economies, are reaching to a point where their debt has already gone significantly up. Their debt to GDP ratio is significantly higher, pretty much historically higher. And now the private lenders are reluctant to lend any money to the government to cover their fiscal spending. Here comes central banks. So central banks step in these situations and they say, okay, we will finance your fiscal deficit, Mr. President or Mr. Prime Minister, and in return, we will buy your treasury bonds. So the government issue treasury bonds, 5 years, 10 years, 30 years treasury bonds, and in return, the central bank purchases those bonds and finance the government fiscal spending. Now, understand the difference. The taxation and the public sector borrowing, it doesn't create any new money. It's the same amount of money that is being circulating into the economy. All the government is doing They're transferring the wealth from one end to the other end of the economy. No new money created, no inflationary measures. It's the same amount of money that is chasing the amount of goods and services in the economy. In case of central bank, when they purchase government bonds, it's called quantitative easing. They are basically creating money out of thin air. That money did not exist anymore. It did not come from any wealth or any goods and services. It just printed out of nowhere. When the government gets this newly created dollars, that gets redistributed across the economy in the hands of average Jane and Joe. They spend to purchase consumer goods and services. Ultimately, this new money drive the inflation up, drive the consumer prices up, and this is where it is highly inflationary. Okay, whenever the new money is printed, all it does, it steals the purchasing power from the savers and then redistribute it across the economy. And the reason why this QE program is so unethical is because that is invisible to a common average Joe and Jane in the economy. They don't know what's happening behind the scene in the economy. All they're seeing that the consumer goods and services are getting expensive every day and their savings are losing purchasing power. Here's the thing, inflation is the hidden tax. Even though the government could have increased the taxes, but of course they can only increase taxes to a certain level before it gets really higher and people start resisting. Then they started doing these measures, which is hidden tax. Inflation is a hidden tax because you're not seeing that you're being taxed in front of your eyes, but behind the scene, your money that contains certain purchasing power, it's being taken off and redistributed across the economy. And you don't know that you're losing your purchasing power every single day. That's why QE is so negative. That's why QE is so unethical versus taxation and private sector borrowing. But hey, because the government has no choice, because they have leveraged themselves too far, they have already stretched themselves in terms of the debt, they have no choice but to reach out to central bank and ask them to finance their fiscal spending. The other negative part of QE is it increases inequality because the wealth distribution is not equally. It's the government official who will decide, who's going to get what at what percentage. So because of all these financial and monetary policy being adopted by the modern banking system and these working governments, we see the inflation is continuing to go up. It's not going to come down, even though the CPI, which is a highly manipulated number, can be shown as it is reducing. The real inflation is continuing to go up because of all these things that I just explained. And the worst part of this QE is it affects the people who are living on fixed income, like retirees. They don't have any other chance to boost their income, so they're the one getting badly affected. And I found it very disturbing and sad that average Canadian do not really understand the way the financial world actually works, the way the governments work, the way these banking systems work, because you know what? These bankers and central planners, they're actually implementing policies which are going to hurt you more than do any good for you. And that's the whole purpose of my channel, is to educate my fellow Canadians about the financial world, how these things are working. And you should be aware of, all these policies and impacts that you're going to have as a result of those policies that central planners and the government officials are implementing, so that you can make an educated decision about yourself and your financial well-being. So I hope this is helpful, and if you like it, give me a thumbs up and hit subscribe, and I will see you in my next week video. Take care.